All right, a look at our top stories now. Let's see what's making business and financial news. We can check in on the markets at the moment. We can see how the indices are trading. And we're getting these figures. A lot of investors have been reacting to the coronavirus outbreak. Tokyo down nearly 1% in trading. Hong Kong in the green, as is Shanghai Composite, and the Seoul Kospi Index down 0.1%. Now, let's get some analysis on these figures and speak to head market strategist for Asia Pacific at AxiTrader, Stephen Ennis. Stephen, tell us, the markets, how have they been reacting to this coronavirus outbreak? We're seeing that figure out in Japan down nearly 1%.
Yeah, it seems like we're on a bit of a risk loop. Start the week off well, and it sort of fades as we get to the end of the week. But that's where we're at right now. Japan's sort of an isolated case here. We had a big hit on GDP due to the increase in taxes that are having much more negative effect on the economy. However, the market's willing to look past this backward-looking data simply because the market firmly expects the Federal Reserve Board to cut, and two, Japanese government will come in with stimulus, as will the Bank of Japan if needed. So, it seems to me that any risk in the market, central banks have got the markets back, and that's really what's bringing investors back into equity markets.
And I think we're still waiting to see just how big the effect will be on global growth, as well as commodity prices. How have oil prices been reacting in particular?
It's just amazing when you think about the scale of this. There's some 500 million people being affected by this quarantine in China. That's 1.5 times the population of the U.S. I mean, that's huge. Obviously, we're seeing, commodities and oil trading negatively on this news. OPEC is coming to play ball here by at least talking about cutting production of 600,000 barrels per day. Well, I don't think that's going to help much. I think it might stop the bleeding, but I think the direction of travel remains correct, and that's lower for oil prices over the near term.
All right. Thank you very much, Stephen. Stephen Ennis, head market strategist over at AxiTrader. Now, in Belgium, the average employee gets 20 days of paid vacation time a year. To some of our viewers, that may already sound like a lot, but there's one Belgian company that plans to start offering their employees even more paid time off, as many days as they want. A policy of unlimited paid leave that isn't quite as amazing as it may sound. Alison Sargent has the details.
Today, they're at the office, but starting in March, if employees at this Belgian translation firm want an extra paid vacation day, all they'll have to do is ask. A new policy of unlimited paid leave, the company's CEO hopes will improve performance and prevent burnout.
People never get exhausted or burn out because they can feel internally that they need some time on their own. And at that time, they can request holidays. The bigger goal that we have is to show that the workplace is not an enemy.
This CEO isn't the first to offer unlimited paid vacation. The policy is popular among startups and tech companies in the U.S., a country where employers aren't legally required to offer any paid leave at all. But unlimited time off doesn't mean endless vacation. Critics point out that workers with indefinite vacation days often end up taking less time off, either out of guilt or cultural pressure. And as these employees are already anticipating, more time off won't mean any less work.
The pressure is on the objectives I have, which are quite high, quite demanding.
We'll have to see how it works in practice, to see when we'll be able to take time off, because we're quite busy.
While the benefits for employees remain to be seen, the company has had one positive effect since announcing the policy: a boom in the number of job applicants.